Hey, good afternoon. This is Neil Simpler Futures, and it is Wednesday, the 5th of April. On a short week, remember. Short week this week. We've got tomorrow. Really, that's about it. Tomorrow's really about it. Payroll report Friday morning. Futures will be open for about 45 minutes after that, but there's really no trading. It's just open long enough to let you do some hedging or something if you need in front of, holiday weekend, long weekend. So sometimes the story is there's just not really anything to do. And that's a result of the market finishing a move, which is we refer to as price discovery or trending. The move was underway, right? And what will happen is the market will move in direction to a point where it finds an opposing force, and if it's up, then it's looking for a seller. Until it finds a seller, it'll keep moving and looking through that discovery phase. Once it finds an opposing force, it'll settle back down into some balance, typically then go through a retracement in order to reaffirm and establish some support on the retracement for then the next leg of continuation. Well, what's happened so far is from the beginning of the year, we've gone through a couple of phases here, one up, down, and back up. From this particular phase, from the March OpEx, this has been pretty well a straight way, kind of a one-way street. And we're in the little pause phase of this, and what I anticipate is what we see often, and that is that it'll complete a move, come back in for a retracement, looking for the support, looking for the opposing force, and then continue on with the move. So how do we define all of this and then get a plan for the next leg? Because right now we're in the wait phase. That's what this week has been so far. The first video was like, wait for a retrace, and now it's Wednesday, and I'm going to say the same thing. Well, wait for a retrace. But let's talk through it a little bit. Notice that we've been making a series of higher lows until yesterday with an outside rejection reverse or bearish engulfing, an outside range day. It ended what's called one-time framing up. That is a series of higher lows. It ended that yesterday. And now we've got a lower high today, which really what happens is basically yesterday interrupts the one-time framing, which is trending price action. If you have a series of higher lows, you're trending higher. If you have a series of lower highs, well, come on, you're trending lower, right? So this has been a series of higher lows. We're trending higher. Until yesterday, outside rejection reverse or bearish engulfing with a lower low means that we've now interrupted or at least paused that one-time framing higher with the higher lows. So today, what we ended up with was a lower high, meaning that this is now starting a sequence of one-time framing lower. It has to continue with lower highs in order to continue with that sequence, but we would anticipate that would just be the retracement phase of this uptick trend move. This is the retracement phase. Typically, they're lasting 3 or 4 days. And once it has dug deep enough, it'll find its support and then continue with this next leg higher, right? This next phase. So let's start real quick with a touch higher time frame, a weekly. Let's go to a weekly and ask the same question. What about on a higher time frame, weekly? Well, the weekly is one time framing higher. We've got higher lows on the weekly. And by the way, it would have to retrace quite a bit in order to come and interrupt that on a weekly. So your higher time frame is trending higher on the weekly. You're now dropped back to a daily. Your daily time frame was trending higher until yesterday. It's now in, call it a retracement. So now then our job becomes to try to figure out, okay, how far back would you like to plan for this, allowing this to retrace and still consider it bullish. What would interrupt that? What would change that? And how far reasonably do you anticipate this to come back? So let's start on that now. And we'll go pull a fib from the bottom of the move down here to the recent high, which is just as recently as yesterday. By the way, that's another thing. The high of this move was made all the way back yesterday. So yeah, not that long ago. On the daily chart, if we pull this, we have two very most immediate bullish retracement levels. Not that it has to stop there, but those are the two primary, most immediate bullish retracement levels. Today it found one of them, the 236. Next in line is the 382. Either one of those is what you would have to refer to as fantastically bullish. I mean, that is a minimal retracement. Very acceptable is the halfback, happens all the time, and then where things are said to be broken, if you will, is a retracement that extends beyond the 618. So let's put this in perspective for a minute. We've just come from 38.50 low, which, by the way, all that was from the Feb OPEX high, all that was a retrace back to the year open / balance of this December by January, or really even December by January consolidation period back here. That's all that is. If you profile that, and I'm going to show you a profile in a minute, if you profile that, you get about 38, like 60 or something like that, point of control for that period. So what happens? We go from the beginning of the year up to Feb OPEX and then retrace down to March OPEX to resync with the close of last year and to reassert a footing on balance, which affirmed support with that and then took off to the upside. And that's the phase that we're in right now. That took off to the upside. So, all right. So with that, let's look at something real quick. That will be, if I can get it here for you. There we go. All right. All of this period of time that we've been really just, honestly, look at this. I mean, it's just been up and down, sideways, back and forth. It's really just been, it's very, 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 I mean, it's a wide range, granted, but it's really just up and down overlapping price action, right? So you go all the way back to the beginning of this overlapping price action. And I guess you could argue that it's back here maybe late October or to this kind of period right in here. What I did was I chose this period, which was about, give it kind of the start of area of November to present. All right, and here's what that looks like. We looked at the whole range of everything that's traded, and then I roll adjusted it because remember we were on a different contract. December rolled to March, rolled to June contracts. So I roll adjusted this for making price adjustments for the rollover gap and etc. And profiled everything back to that November time frame that I was telling you about to present. You can see the date range right there. This is all the volume that's transacted for that entire overlapping price action range. The balance is back here at 40.33. Okay, now, what if I do this? What if I say, well, let's start from the beginning of the year, not to include all that stuff that happened back there in November, because remember that November-December period, boy, was that choppy. That was a whole big sideways choppy mess. So let's start from the beginning of the year till present and see what that looks like. Well, lo and behold, it's about the same. It's about 40, 25, 30 here, as you can see right there on the screen. That's point of control. That's balance. That's the most balance traded, the most volume transacted since the beginning of the year, which is almost the same as going all the way back to November, as you can see with those two time frames that I've just profiled for you there. So let's take that information and then look at what we're dealing with here on our daily chart. So What I'm talking about is the period that this thing just most recently left and then took off to the upside. Not the low of the move, but just recently left and took off to the upside. So let's go look at that. We'll look at that separately from everything else. And adjust for, yes, no extended. Because I want to see where it left when it left here. It left right there, as you can see. I'll zoom in a little bit. Left right here and just took off to the upside on the PCE data late last week on Friday. So what that does is that leaves a gap. Well, my goodness, look at where the gap is. And a gap, by the way, is weak structure. You can't build a big, tall building on the top of a weak foundation. This thing, what I'm suggesting is at some point this thing's going to come back in and it's going to resync and close this gap and resync with that balance that we just talked about. And it's going to come back and it's going to trade about 40-30, 30-30 something back there, right? And that is the point at which it's going to close this gap and retrade that balance back here that we just saw. We profiled it two different ways, one going all the way back to the beginning of the chop and then one saying, well, let's start from the beginning of the year, and we get the same answer either way, which means that the most traded price balance over under point of control is back here on a gap on a retracement that we just had also at just below a 382 and between the 382 and the 50, fantastically bullish are the 236 and the 382. Perfectly acceptable is a 50. No qualms with that. Basically, this is a long-winded explanation for and way of saying I'm happy waiting through. First of all, make a decision. Do you like the market for higher or lower? Do you like it for higher? If you do, then you say, okay, long is the answer. But long doesn't mean from any price. Long means long, but it means still you can be patient and wait for your price. So what I'm suggesting is that we have information up here to support the idea that we've ended one-time framing on a daily, but still in trending price action on a weekly, meaning that the daily is only in retracement to rejoin then the trending nature of the weekly, but still that answers only one question: do we like the market? It does not answer yet where do we like it from. The additional analysis that we're doing here right now is to answer the question, where do we like it from? A couple of spots. Neither of which really honestly have traded yet. They're as deep enough, right? I mean, you can trade this thing during the day on a 5-minute chart, and we do that. But I'm here on Monday and Wednesday, sometimes Fridays. I can't tell you how to handle a 5-minute chart when I'm here 3 times a week. So, or twice sometimes, 2 to 3 times a week. So this has to be a higher time frame plan. The higher time frame plan is we still got some waiting to do. And you got that waiting to do on a week with a holiday at the end of the week and a report that's going to happen on Friday morning when the rest of the market's not even open. So the price that we're paying this week is one of patience while we're waiting for this daily chart to retrace enough that it can then bounce and join the trending nature back on its higher time frame, the weekly. You want to know where I really think that is? It's back at about 40-30. Can we pay a little more than that? A little higher than that? Maybe a little, but not much. You're not going to talk me into a whole lot higher than that. A couple of levels that will allow you a little trade that you can get a little trade off of would be 40-90 because that's the weekly pivot. 40-60 because that's a fib level on the retrace, and then the real trade is done at 40-30. Okay, 40-90 and 60 are give it a shot. Pick you up a little trade. And it might be a good trade. Maybe it's a 20-point ES trade, and that's $1,000 or whatever. But hopefully you're getting what I'm putting down, because the real trade is, in my opinion, it's this thing has not come in enough. It's not retraced enough to be excited about price yet. That time will come. We're not there yet. We're in the patience phase right now. That's what I got. Good trading, nice evening, good weekend. Catch you again at the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me